going to talk about technical debt, and since it's the first, there's also another one towards the end of the day on technical debt. What I will going to do is to give a brief overview on the topic, and I also included a case study. Of course, that makes it more lively to also see how this will be done, and will then summarize with a couple of principles and things what we learn. But I also introduced a set of questions, because we have here a quite good mix of industry and academia, and so I think the best to do is to cross-fertilize. I've structured it into the three parts. First, a little bit of history and principles on technical debt, then practices. I didn't find really 50 ways, as the old song says, but at least 40 ways to leave your debt is already a big bunch, and what I mean with that is you need to systematically identify what really matters and what you want to leave out. And finally, also looking into what does it mean practically speaking. When looking to debt these days, all newspapers are really full. I mean, not so much on technical debt, but much more on the perspective of European budgetary deficits, etc. And obviously, once you talk about your budgetary deficit, life is quite hard, and this is exactly what the guy here also observes. When you get all his invoices, all his bills, you realize, well, this could be too late. And if he then is going to ask for the insurance, well, it seems to work on the European level, which is because there's no really any fallback option foreseen. But on the industrial level, I mean, the fallback option is you will fail, and that can be quite fast. So there's also a kind of historic perspective, and I try to find out some traces. I think the one which is always associated with technical debt is the one of Lord Cunningham and the Uppsala in '92, when he summarized it quite nicely, that if you ship it a bit early, it's going into debt, and if you don't pay back, you will accumulate. If you go a little bit more back in history, then we find a very famous paper of Fred Brooks, which distinguishes accidental and essential complexity, which is another way to look at the debt. I mean, the word was not yet coined, but the distinction between what are the accidents which sum up is there. And finally, even earlier in the 1980, it was Manny Lehman who is saying, if we work and we would not really close open issues, then complexity accumulates. So even at these early days, more than 30 years ago, people already thought, and Manny Lehman certainly was a very bright and smart person, to foresee what will happen if we accumulate on this debt. The way to phrase it today is it's about eventual consequences. It's not forgiven. I mean, that would be the easy part if you could simply translate, I have to do this and this and this, and I have to invest here and there, and then I will be profitable. Life is not that easy. But it's about eventual consequences if we don't do our homework probably, and then the cost of the same work would be more in the end. Very recently, I also found a survey which Bill Curtis and his CAST company did, which was just investigating 11 companies and doing an in-depth analysis of IT software, finding out that an average of $3.61 US per line of code, and then they would multiply it with the amount of line of code. And I guess if you take Bing or other code bases, that sounds quite horrible. Now the other side is, of course, we don't know really the statistical basis of that number, but I think each one of us can understand that it's certainly more and more expensive, and it's interesting, and this is what I like with that figure, it's interesting to think about it in your own context. And this is what I want to show later also in the case study, although we didn't do that measure, but we at least investigated what it would mean. The typical way to portray technical debt, and I took this out of a similar picture which Steve McKernell, another of the IEEE software editor-in-chief, had once published, which was distinguishing value from cost. That's the horizontal layer, and what is visible and what is invisible. And the normal way to start is the upper left. I mean, we have a list of features or use case or ideas what to do. We translate them into a product. We hopefully ship the product, are successful. That's value. Now, On the downside, if there is defects, if there is over-engineering, which is a term I come back later, there will be cost. And they are visible in a way because you find the defects sooner or later. As we have just heard, you can find the defects by different means, but at the end, your user will find some of them. The invisible part is more difficult to judge. And the value side could be a good architecture, could be quality attributes such as having reliable system, having a safe system, if it's, for instance, embedded software. And if it's on the cost side, this is where we then have the technical depth. Again, we can distinguish different patterns. It can be done in a careful way, that is, we going to ship knowing that there is some risk. We try to mitigate the risk, but we want to be in the market because the market needs the product, and we are able to repair or self-heal the system, as we have heard this morning. That can all be careful, while if it's careless, what it means is we just go ahead, we don't really care, we just think, well, we'll see what happens, and that's, of course, more dangerous. Aware and unaware is another way to distinguish, in a way that if you are aware on the depth, you make a trade-off analysis and you find the right risk mitigation is certainly better than you're clueless and you suddenly realize, well, we should have done this 2 years ago. And I often see this kind of pattern with quality attributes which are not followed, such as security is a nice example, and we discussed that this morning. It's hardly possible to design security into a system. My world is not so much the IT branch, but more the embedded branch. But what we find these days is a lot of security mismatch in safety-critical systems where people would have not just thought about it and gradually learn about it, but then it's extremely expensive to build that and design that after the facts. And often this technical depth is almost a step function. I mean, once you become aware, you already realize, well, we better redo the whole thing. There's a managerial perspective also, aside the technical perspective, which is take mergers and acquisitions, where you make an acquisition of a company. You have to find out what's the value of that code base, what's the value of their products, or a due diligence. At my times when I was with Alcatel-Lucent, we did a lot of acquisitions a couple of years ago of smaller startup companies, and one of the topics where I was often involved was to investigate architectural designs and find out what are the risks. I mean, that was not necessarily always the kind of go, no-go decision, because sometimes you just need to have the people and their skills, or you need a couple of patents. Then it doesn't really matter how good or bad the software is, because you're going to throw it away anyway. But at the end, it's important to investigate what's the risk related to that piece of software. Or a very normal way of decision-making, that's portfolio management. Shall we go ahead? Shall we stop it? Shall we invest so and so much? The typical term, as opposed to technical depth, is also sunk cost, which is the money which you already wasted. Now the question is how much you have still to pay in order to get it back on track. And lifecycle costing, total cost of ownership, that's the forward-looking view if you look at it from your own perspective, not think about M&A or not think in terms of how we're going to repair. The important notion is, and that's what I want to emphasize here, that from a managerial perspective, it's a life cycle, a product-related thing. It's not a project, although the budget is project-related, but it's really taking the whole life cycle. It's a lot of strategy impact on, are we going to continue, are we going to invest so and so much, as opposed, for instance, to certain development paradigms, such as Agile and other paradigms. And this is something to distinguish. Also, there's a lot of connectors, but it's relevant to have a perception of what to expect in the life cycle, what are the iterations which we take, and also what would it mean to decide today for this set of features rather than that set of features. And there's also an education perspective, and I appreciate this game which SEI, as far as I remember, has initially initiated. I'm teaching, as Forrest just said, as a kind of leisure or pleasure activity at the University of Stuttgart. And I do that with, that's a kind of a graduate class in software engineering. I use a similar game, but the interesting part of that game, which by the way is free to download and to use, is that although it looks extremely simplistic, you have these decision points. I typically overlay it with a real case, such as automotive software in a control unit, and then I kind of build decision points which are real life, not just these symbols which you can buy. But even in that setup, the game drives a kind of a decision making with anticipating future risk, and this is what technical depth is about, and this is why I like that idea very much, because it really allows you to use it in school, to use it with students. You can make an animated simulation. I currently ask one of the graduate students at the university to make this a kind of an online game, a simulation game. There's a lot which you can do, but the interesting part is really this question marks. How can we proceed from here? A famous case study which I want to show, even if we had already Microsoft this morning, but again we repeat a little bit here, but it's very ancient history, so it's archaeology, and I think archaeology is always fine to look into, to learn from, is the situation some 15 years ago with the internet browsers which were in their startup at that time, and also some of us were still, I mean not me, but maybe you in kindergarten at that time. It's interesting to really learn from, especially if you have a curve like that. That's the market share. If you look at Amazon, for instance, normally what is a rule in internet business is once you have such a market share, you must be extremely, quote, quote, whatsoever, to lose it again. I understand Bing tries hard to revert this kind of notion, but a strong market share has a lot of value, because although it's just a click away, as we typically say, it's just so much in our mind that if I want to go for books, I go for Amazon. If I want to find something on the internet, I go for Bing. And well, that's what we learned this morning, etc. But what happened was, in a few years, this completely converted. Here, look, Netscape 1%. What happened really? And this is out of history. I typically put my sources somewhere so that you can trace it back. And you can get the PDF if you like. Well, the initial part is what we all know from history books. Until 95, I think what was quite interesting was Microsoft knew they were way behind. It was this, what is supposed to be called the wake-up call of Bill Gates, focus on the internet. As far as history goes, he really asked people to stop their work and learn somewhere in summertime that year, or one earlier. And finally, this Internet Explorer was available. And things grow uncontrollably. And this is already a first lesson which I want to emphasize, which is that the first thing, if we talk about technical depth, is to make it visible, to make it one or the other way visible. Otherwise, we don't even know what we talk about. Now, as it continues, Netscape was in advance. It was growing very fast, 120 persons. It's quite a lot for that time. 3M lines of code is also quite a lot, because it was still to a high degree manually coded, not so much generation. But if we look to that long list of feature control, of no product management, no architecture control, insufficient quality, speed is all. This is a kind of notion which we often see. It was initially the internet speed, but in effect it was also a bit dumb, because it was exactly this accumulation of your sins, which sooner or later come back. While there was then seemingly a second wake-up call, although it was not so popular, but to emphasize product design. And I mean, we knew some of the outcome of this phase, which was, for instance, that the browser was very much connected to the operating system, which later on brought some fines. But I think it was still a smart business decision. And there were a couple of very smart moves as well, architecture core team, etc., etc. Security, by the way, you probably know it, but it was also very much driven those days. So the second lesson learned is to evaluate the trade-offs and also decide, not just know that something is wrong, but also to make deliberate decisions, to prioritize and to find out what can we do better. Finally, if we look to the end of that story, there's some quotes which you also find online, is we are in a really bad situation. We should have stopped shipping a year ago. It's dead. We're paying the price for going too fast. And okay, there are a couple of other technical topics. Eventually, the whole code was open source, and Netscape closed down a few years later. The interesting part is why I added Firefox here, is also to be a little bit more balanced, not only talking about another competitor, is that rather than using this code basis, they finally also decided to do it again. There were some notions that people working on the Mozilla code base were saying that's like spaghetti code. But anyway, I mean, I don't want to make it worse. It's just what they realized is redo. And that's the third lesson, which is systematic control. Once you have identified and evaluated what to do, it's key then also to follow your reasoning, follow what you observed, and not continue the old way. And sometimes it means to really stop something and redo. And I've seen that in several cases where we recommend it after some gap analysis, as we call it, for what is the technical debt, what are the different sins which have accumulated, that it would be cheaper to redo, even if it's sometimes hard, but to continue on the basis of so many unknowns could be very dangerous, specifically if you're not in that luxury position of a search machine environment with 3 releases being available. In embedded systems, we typically have 1 for cost reasons, and it's not much to swap. And also, it's distributed worldwide, be it now medical devices which are implanted, or be it in cars or in spacecraft or in aeroplanes or whatsoever. And it's rather difficult to swap releases. So let's look now at the framework and what can actually be done. And the first thing which I want to emphasize, beside that it's a life cycle theme, is that it's not naturally bad. And this also shows there's a limit to this metaphor. But I think what we also learn from the current debt crisis in Europe is it's not really bad. I mean, you continue to live, and you still can find a way. You just print more money. So there are different ways to handle that. And what I want to emphasize with that circle is obviously there is some kind of borrowing, even if you just borrow from your own future. The question is what you do with it. I think that's also a major debate which we currently have on that political level, which is not just cut it, but maybe keep it for a while and rather invest in the right thing, of course. And if you invest in the right thing, you'll be able to sell more or to deploy more of your systems. You earn money, hopefully, if you're doing the right thing, and then you would be able to repay. If you shortcut somewhere here, there's a certain risk that you strangulate yourself because you run out of money. So this is probably a bit difficult to read, and I'm not going even to read for you. As I said you will get a PDF, so you can read it afterwards. But what we try to do in a more systematic way, because I mean, IEEE software is not just about ad hoc, but it's to give guidance to the leading practitioners. And one way here is systematically approach this theme. So what we looked into was typical root causes. In fact, the framework is a little bit bigger because there's also a kind of a check-up in front, which I will show later, but it was too dense to show everything on one picture. Symptom that will help to find out the culture, if you want. I mean, if people talk one way, you realize, well, this could be a root cause, but you typically only see the symptoms, like the customer needs it. That's a famous notion which we see very often from sales or from marketing, field marketing primarily. Get ready, we have to ship it. I mean, even if it's not fully finished, but you know, this market is really open now, we have to finish it. And then there's some practices which, as I say, I will not read. These are 40, but I will show a few examples afterwards. And I will show them within the case study because I thought it's more authentic to see it in real life. It's a company, obviously don't disclose name, but it's about critical infrastructure. The challenges were the normal ones of legacy code bases, which is a couple of complexity growth, which made it very difficult to innovate. I mean, the innovation degree got smaller. Competitors, these are the things I cannot write here, but competitors were growing. Even small startups were faster to get something in that environment approved rather than this bigger company. So it was about flexibility, it was about service, it was about schedule and cycle time. And I will later on have a couple of data points which relate primarily to schedule, because that was something which we put first, because at the end this is where they suffered most in the short term, that if in this infrastructure environment they ship late they have penalties, and the penalties can be extremely high because in infrastructure a lot of consequences will be if the product is not available or the solution is not available. So what we did, and this is exactly the 3 steps which I introduced from that Netscape case study, was first of all make it visible. That is, we have a couple of dimensions which relate to that framework, where we then make a target profile. I mean, it's not necessary 100% for each of them, but we agree a target profile of this is what it should be. And this is typically a very tough work because it's like a kid's Christmas wish list. If you ask the managers, should it be safety or should it be testability or should it be portability? They would say, oh, we need all of that. But evidently they never do it. So you have to somehow really fight to not have the 100%. And then you look to reality, and of course that would be even smaller. And then you can see where would be the gaps high and how are you approaching the gaps. Then it's about a normal trade-off analysis. That is, you map the effort of a measure versus the impact of a measure. And then you hopefully find a couple of things which in that right lower corner. And finally, you build a kind of a transition and control the topics. What we did, and this was a very useful stack in that environment, was we didn't look only to code, but we also looked to the process, incremental development. We looked to the people part because we found that motivation was not on the level where it should be, and so we tried also to find out what could motivate people. And finally, we also looked to the bigger picture, which is about solution development. And I will be going fast through these different practices because most of them are known. So on the top level, that was a product core team to make sure that decisions are based on the same kind of stakeholders. Scrum was necessary for that team level, also for increment development. The only difference to the normal project Scrum was that we extended it a bit more to the upfront because it was about investment. And then we looked, of course, also to architecture and code. And I've looked in 3 topics here. The refactoring is a typical question. Identify critical part, but also control refactoring. I see often this ad hoc refactoring, which is pointless because, I mean, you cannot each day or each week do the whole code or some part. Should be some systematic approach behind. Static code analysis, obviously, there's a lot of tools these days around. There are also criteria like MISRA or in automotive, the HIS. But you have also to have a strategy what you're going to do with your highlighted code. And what we did was to focus verification, specifically where the highlight would appear. And finally, code review is still something we should not fully neglect, although a lot of automatic tools are available. But it helped a little bit to focus on those things where you would not immediately find the right tool support. The end, and this is a bit unfortunate that you couldn't see the dots, because there were also dots here, but not showed here. But there were projects, and when we started, the delay was like that, and finally, after there was a 2-year time frame, by the way, we getting closer, and this is basically the beginning of this year, to that target zone of a delay of plus 10% with this approach. Going to summarize from these experiences in managing technical depth, and first thing is it's important to understand. I think this is key because it's something which can be extremely costly, which can be dangerous for your product. I emphasize 3 principles. The first one is to achieve visibility, to know what you're talking about. Even if you reduce it in its dimensions to only a few, like can I maintain it in the future? Is it sufficiently reliable, or whatever is important for your part? Then to evaluate the trade-offs, that is, what different possibilities do I have? And what I underlined here was not to jump just on 2 or 3 things, because you have heard about it, but rather look to a bigger framework and then deliberately take a text marker or whatever alternative approach and say we want to go into these 3-4 things for this and that reason. This is what I call a trade-off. A trade-off is always between alternatives. And finally, to systematic control. So once we have done something, to also follow through. Does it deliver? This is how you close that circle. I mean, measurement is the first, but should also be the last in that circle, so that you can see whether what you have approached also gets its fruits. And this was, by the way, why we use this kind of track chart very early, because we want to see, do we see a trend? Obviously, the big change when you have made your whole code base more maintainable and redone a few of the platform elements, that's the big step. But you see the smaller steps, for instance, by this code analysis. Once we did that more systematically, also test-driven development was something which we introduced here, specifically with the unit test case. It was a real eye-opener, which helped already that code bases would not get too early into integration. And this kind of software is not really tested with the customer. It's tested before. And for that reason, it was important to also have mechanisms which you can find out early. On the other side, I also want to keep in mind that this is a metaphor, and it has also its weakness, which I didn't discuss much, but which you can also read in the literature. So the way I put it is it should go into normal product management. It's about trade-off, about business case, about cost of ownership, etc. It should not start what I call a pseudo-business kind of catchwork where each design team would think, well, today we reduce our technical depth, or in this project we budget 17% for reducing it. It's not a project decision after all. I mean, this should be a more comprehensive picture in terms of buy, make, for instance, in terms of how do you review external code elements, etc. And coming back to Fred Brooks, I coined a kind of an acronym which is reduce accidents, control essence, in order to keep in mind that it's about both. It's about the accident, which grow very fast, but also the essence, which has to be managed, which is where you earn your money with. Or something which I once discussed with Al Davis, also one of the famous editor-in-chief of IEEE software. He had a quite nice book, Just Enough Requirements Management, where he creates the notion of good enough. And I think that's really important to balance what we can do on technical depth versus what could be this uncontrolled over-engineering, whatever call it. I mean, both is bad in a way, and you see the value decreases in both parts. Now, how to identify that area, that's stuff for another talk, or you will have a look to that book. This is what I mentioned with the systematic approach. And finally, as I said, a few stimulus for those of us who are in academia. I think we should still question, is that metaphors helpful, or does it rather bring us to a track which is in the long term not so healthy? I don't know really. Distinguish good and bad debt, how to avoid the over-engineering, that's something which from industry perspective I see as a very critical topic. Education, I think, is always important. Is it only an evolution and maintenance? Can we do something earlier? How can we budget the repayment? How can we relate it to release management, to road mapping, etc.? And of course, I mean, the normal question we ask in industry is also, can we automate it? I mean, that would be the nicest to say, it's like the static code analysis. We have something bigger, which is a product analysis, which does a certain gap analysis, well, here and there. You have hotspots. I mean, there are a couple of nice tools, but mostly related to the code and architecture. I doubt there is a lot we can immediately do. But what I envisage is, for instance, you look to test effort. You bring different dimensions together, and then you find out, for instance, based on past changes, etc., like we do today manually in this gap analysis, what would be the areas, what would be the products, where to focus the energy and how much energy to focus from a business case perspective. And that's it for the moment, and I appreciate your attention. Thank you. Now I guess we still have time for a few questions, and we should wait for the microphone. We learned that this morning, and we are fast learning, so I guess the best is to always get the microphone. Here is one.
So the last thing on your slide, you're saying how to automatically identify technical debt. So I think that's to some degree already possible.
Depends on which dimensions you look at. This is why I say it's certainly, I wouldn't say completely possible, but it's feasible if you would, for instance, look towards architecture analysis, or you look to code analysis, or you take the very big picture, which is if you are forced into a due diligence, you can certainly just look to the expenses on certain parts. But what I'm interested in is the part in the middle, which is to kind of balance maintainability, portability, different factors, and tell how good or bad it is. You can look to defect classes. I mean, a lot of things. This is why I challenge it here. Certain things are possible, and I'm also not suggesting to fully automate, but get it running.
I think we have time for just one quick question. Do you want to go?
So your thoughts are on technical debt. Does it come with a fixed repayment, fixed interest rate, or is it a variable interest rate that you have to repay?
Certainly variable, and that's the challenging part. As I said, if I start discussing that topic, the people would always like to have in theory the 100% in terms of completeness. When I talk about with the same people about the repayment, it's something where they shy away, because, I mean, how much should I invest and for which part should I invest? And this is why I say the beginning is typically the biggest eye-opener for management, but also the most important part, to get them together with the technical people and debate what would be the debt in the future and where would it matter most to start a repayment. It's something, if you go back a few years, when product lines have been introduced, you come into similar discussions, which is what's my platform and what's variability and how do I quantify it.
Right, but one of the things that there was a certain cost per line of code. Mm-hmm. So a certain element of technical debt, let's say one issue. Does that one issue stay a fixed cost throughout its lifetime, or has some linear scale, or is it a variable scale that piece of cost can go up and down over time?
The latter. And I said from the beginning, I mean, this $3.61 per line of code, this is just an average out of a basis which we don't know. I mean, I put it as a quote, just as an eye-opener, but of course, this is not a fixed cost.
So I think we better...
we have a break afterwards,
yes, we
yep.
do, and it would be a good time to follow up with Christof about questions there. Thank you.
Thank you.